You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me.
I understand there's some people in Wall Street who are yelling at Janet Yellen today.
Well, it's just what's going on today. It's just kind of funny that the stock market's down, and it's not really down that much off of its highs. But people are very upset that it's fallen, and on the internet and different message boards, and even on television, some of the people, and they just don't want to see the market down. And one of the reasons why is because people are, according to data from Ameritrade, they're fully invested in the stock market, and people have been buying a lot over the past couple of months. The market really hasn't gone anywhere. It's essentially down now. I think the Dow year to date, and it's below where it was around Thanksgiving. And there's people on margin too. There's record margin debt, or there was a couple of weeks ago at least. So people are vulnerable to a pullback of any sort. So the market has a down day like we see today. People get angry or they look for explanations for why this is happening. And this morning, there's a story that Janet Yellen was giving a talk somewhere with, and made a comment that stocks are at a high valuation. And that made a bunch of headlines. But if you watch the video or read the transcript, immediately after she said that, she then said, but it could make sense because interest rates are so low, and what she said was, to quote the word safe, she said the word safe in safe bonds and debt instruments. And so if interest rates are low, then maybe stocks aren't so highly valued, is what she was basically saying, but that wasn't in the headline. So I don't really think she said all that much, but people want an explanation or someone to blame for them losing money today.
Well, of course, too, in Canada, we just saw the election of a left-wing government in Alberta, the heart of the oil patch. They've had a conservative government for 44 years, and they're blaming the downturn on the Canadian equity markets on that election. Yet I noticed that the price of oil actually went up today. Yes,
it's gone. Of course, it fell quite a bit last year, almost 50% from its high. So I think we're seeing a nice bounce off of those lows, and we just have to see. I'm not sure if oil is just going to go up week after week. I actually kind of suspect it won't go up in a sustainable way for quite some time, but it has definitely gone up lately.
Do you think it still has a chance to set new lows?
Yeah, I think it's possible, but if it did, I don't really think it would fall too much. I just kind of think it's going to be in a trading range for quite some time, much like we've seen in gold for the past year. Basically, gold has been in a trading range. That trading range is narrowing, with really 1230 now being the key level. That when gold breaks that, it'll go into a new bull market. But somewhere, 1150 is the bottom of the range, and 1170 is a nice support area to be buying. But after a bear market, you typically see a market go into a trading range for quite some time. So I think that's basically what's going to happen with oil here.
Interesting article on your website. When a gold money manager launches an airline ETF, it could be a sign of a top. Is it?
Well, what happened was I don't really like airline stocks anyway, and I've actually said things this year negative about them. I've actually recommended in my premium service shorting a couple airline stocks. So and then someone launched an airline ETF, which I found that kind of amusing. But I think what happened was there was two airline ETFs, and they basically disappeared, and I think he's just trying to replace them. But it's also kind of funny because he's trying, when these firms create ETFs, they do so because they expect there to be investment demand in them. I mean, that's how they make money, is for the management fees and the money flowing into them. So I find it kind of amusing that his firm is specialized in precious metals and stuff, and they're not doing anything in precious metals, but instead in the airline world. I think that's kind of funny.
Well, I would think that airline stocks would be favorable maybe with really low oil prices, but if they go up again, there goes your profit margin.
Yeah, well, the real problem I have with airline stocks is just that they've already gone up tremendously over the past 2 years, and that's really the real problem with the stock market in general. It's not that it's just gone up so much, and it's gone up for 6 years, that it's very difficult to find stocks as a whole at a cheap valuation. I mean, I'm interested in the mining sector because it was in a bear market, and I think it'll go into a new bull market. But just the stock market in general, it's so late into the game. I think we're really in a topping market. But the most important market right now, I actually think, is the bond market, in particular the German bonds, because what happened there, well, first of all, in the United States, the basic bull argument is essentially what Janet Yellen was saying, which people kind of totally ignored, which is that, well, interest rates are zero, so stocks, can go up, or you shouldn't be scared to pay high prices for stocks because interest rates are zero. But what's going to happen when that changes? And I think there's a big danger that that's what we're going to see, maybe not immediately, but down the road. And the reason why is because, last year in October, when the market corrected a bit, there was a big spike in the price of U.S. Treasury bonds, meaning a lot of money flew into them, and then they quickly reversed, and then they fell down just a little bit. But by the end of the year, they broke out again, and frankly, that breakout really surprised me. And then they had a really powerful rally. Now, what happened was that the Europeans started their quantitative easing, and their bonds went up into that announcement. And I think that's what helped the U.S. Treasury bond go up. It just got lifted up with what has been a global bond bull market. And with at the peak of that bond bull market a few months ago, the bond yields for lots of European bonds are negative, meaning that if you bought these bonds, you're not making interest, but instead paying them, which is total insanity. But sign of an imbalanced market and a manic top in the bond market in Europe. But that's a top for the bond market all over the world because that helped push our bonds up in price too. And what's happened is the European bonds have been falling the past couple of weeks, and so has our bonds now. I think they're being dragged down by that. So I think we've seen like an epic top in the world bond market, and that's going to have huge impacts on everything over the next couple of years. And already we're starting to see unusual stuff. I mean, the stock market's down today, for example, and U.S. Treasury bonds are down with it. Normally, they tend to do the reverse and act as a safe haven. Now, I don't think that's going to cause an immediate problem for the U.S. stock market, but and no one's really paying attention to this, but I think it will down the road. And I think that's really the big story of what's going on now.
Well, we might be making fun of negative bonds in Germany, but some U.S. banks now are charging large account holders for putting their money in. So, in other words, a negative interest rate as well.
That's crazy. I didn't know that. I don't know who would do that. Why would you put your money there?
Well, I remember Mr. Drysdale and the Beverly Hillbillies would do anything to have money put into his bank. He wouldn't go and charge them for it.
No, well, we might be, when it's all said and done, we might be returning to that type of mentality.
Although, if you take a look at the service charges that banks slap on your account, really, you're in a negative interest rate kind of climate anyway.
That's true. I mean, I have, my bank account, I'm not getting any interest, and, he charged me $30 a month or something, so here you go.
We'll have more with Mike Swanson right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson from WallStreetWindow.com. A comment on your website that the small fry are the big fry in the stock markets right now. I'm thinking of China, where the markets, at least a couple of weeks ago, were so hot they had a shortage of brokers to take the orders, something like 1.5 million orders a day.
Wow. Yeah, it's quite amazing. I actually got an email a few days, I think it was yesterday, with someone asking me, should they buy China? Yeah, because it's gone up so much, and when a market gets hot, people get interested in it. But I honestly have no idea. I don't really know what's going on there. I could tell you this about China, actually. In 2009, I did buy several Chinese stocks, and I picked them out. This was in June or May or something, and they had good charts, and I would go, and they had good analyst estimates for high earnings growth, and the PE ratios were very low, so they looked like they were good valuations, and they went up for several months, and I ended up getting out of them. But then a year or two later, almost all of them just totally collapsed. And what ended up happening was that those earnings weren't real. It was basically what I had bought into were stocks that were making everything up about their earnings, and they're frauds. So if someone wants to buy these China stuff, they got to be real careful. It's hard to know what you're really buying.
The U.S. economic recovery is a hoax. Do you go along with that theory?
Well, that's what Steve Wynn was saying. Now, in his interview, he was being interviewed. Steve Wynn's the CEO of the Wynn Casino, and he was basically saying that the casinos in Las Vegas aren't really, as a whole, making a profit. Some of them are, but as a whole, he claimed they're not. And he claimed in the interview that unemployment is 15-20%, and that there's inflation. But who knows what the real numbers are? But the main point he was making, I think, is undeniable, and that is that there has been no real jobs boom during this so-called recovery, and therefore the recovery isn't real. I mean, the jobs numbers aren't really, the unemployment numbers aren't real because they discount all these people not in the workforce. Who knows if it's 15% or the real unemployment rate or whatever it is, but the jobs that have been created, the bulk of them are part-time and low-wage jobs. And those statistics are that the middle class is shrinking, and you just look at what's going on in our inner cities. I mean, look at last week what's happened in Baltimore. You had these police riots, or riots against police or whatever, but the backdrop of that is a city that 50 years ago was one of the biggest steel producing areas in the whole entire world, and that steel industry's gone, and the neighborhoods that were thriving as a part of that are now ghettos where that are the epicenter of those riots. And I'm sure that the misery of the high unemployment and the drug culture and all these things have a lot more to do with the cause of the riots than some Al Sharptons or something,
Well, I wondered why, I was watching the TV images from there, that the rioters were breaking into stores and stealing TV sets and computers and so on. And I thought, what does that have to do with allegations of police wrongdoing?
Well, you can make some money if you sell those things. Any sort of situation like that, I mean, you see the headlines as a fellow was picked up by the police and he ends up dead a few hours later, or a couple days later, and then they riot. But, really, are they rioting because this one person died? I mean, if you go on the Baltimore Sun website, there's been all sorts of bad incidences with the police there. The city of Baltimore has put out something over $3 million in settlements from people suing about whatever they didn't like the police doing over the past couple years. The point is that, this thing is just a spark of something already going on. And who is it really about the police, or just these people are just, it's just what it is? Yeah, it's like the 60s. Not it's nowhere comparable in size to the riots that occurred in different cities, including Baltimore in the 1960s. In 68, there's a giant riot in Baltimore in which hundreds of people were hospitalized. I think 10 people were actually killed during the riot, and it was widespread throughout about a quarter of the city. Now this time, it's really just a few blocks, and I think it was like 5 properties that were actually damaged. So it's nowhere comparable in size. I actually kind of think that the one in that Ferguson area may have actually been bigger, but when you watch it on television, they don't really tell you much of what's really going on. You just see these images over and over again, and you can't tell how big this really is or really what's even happening. I don't think they really care to take the time to tell us much of anything.
Mike, is there anything else you wanted to add today?
Yeah, I'll just remind people or throw it out there again that despite, what we were saying about the stock market or the bond market, the flip side of that is the gold market, and I do think that we are, by the end of the summer, we're going to see gold in a new bull market, and the key level is 1230. It goes to that, and we're off to the races. So if people want to make money, that's the place to do it.
Thanks a lot for chatting with us.
Thank you.
My guest has been Mike Swanson from WallStreetWindow.com. You're listening to HowStreet.com Radio. We're also on TalkDigitalNetwork.com, and check out our YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.